Hey, in this video, we're going to be talking about two indicators that can greatly help improve your options trading results. These things work like magic every single time. So what I'm going to do in this video, I'm going to show you these two indicators and show you how you can use, if you're an options trader specifically, how to use these two indicators to help time your trades better, your option trades better, to make you much bigger profits. All right, so let's just jump right into it. All right, everyone, Lowell here from smartoptionseller.com. Today, we're talking about two indicators, and the first one is the VIX, and the second one that we're going to talk about is the Fear and Greed Index. Okay, those are two sentiment indicators. They're called sentiment indicators because they measure the emotion of the market participants. Okay, and they really come alive in the options market. So if you want to improve your options trading results, you have to track not only the VIX, but the Fear and Greed Index. And I'm going to show you both of those. So let's just jump right in and talk about how these two sentiment indicators affects the market. Okay, what we're looking at here is a chart of the SPY. This is the ETF, the exchange traded fund for the S&P 500. It's probably the most liquid, most widely traded ETF out there, and it's a proxy for the market as a whole, for the S&P 500. If you follow the markets, you know the last week or so was really dramatic for the market. Actually, the last couple of weeks, you can see here's the last few weeks of the stock market right here, the SPY. Okay, we topped out above 560, low 560, maybe 565 here, and then we crapped out. Okay, this was a really bad 2 weeks right here, and it really came alive just this past week. This big day right here was Friday. This was August 1st and August 2nd, and then we had the big drop this past trading week. Okay, so what happens is that when the market drops big, you have these two indicators, the VIX and the Fear and Greed Index, that just really come alive. Now, what I want to show you here is the VIX. For those of you that don't know what the VIX is, it's a measure of the front month the SPX, the S&P 500 index options. Okay, and it measures. Basically, it gives you an idea for a couple things. It tells you the mood of the market, the fear of the market, and it also measures how expensive or not expensive option contracts are trading for. Now, this is a chart of the VIX, a daily chart of the VIX. Now, you can see this spike right here. This is just insanely intensive, okay? This is the VIX. Now, the VIX moves inversely to the markets. So when the VIX spikes like this, that's when the stock market is going down. But this is, as I said, this is a measure of fear. So as you can see, fear is going up when the markets go down. I think we all know that when the markets go down, we're all like, oh my God, I'm losing all this money. I need to get out. I need to sell my stocks. I need to buy put options. I need to hedge myself on the downside. So as fear grips the market, the VIX goes up, the market goes down. So they move inversely to each other. But also what the VIX does, it measures the priciness of options. When the VIX goes up, option prices go up extremely as well. So if you're an option seller like we are, when you get spikes in the VIX like this, it is a great time to be selling options versus buying them. Okay. And the great thing about the VIX is that you get these spikes and they only last a couple days at most, which also means that when the VIX starts to come back down, that also means the market is going to turn back higher. So if you want to use this as a timing mechanism for your trades in the market, when the VIX spikes, it's a great time to be selling options contracts to take advantage of the priciness of options contracts, because when the VIX starts coming back down, those option prices will come back down as well. So you can make money very quickly. All right. So let's just, I'm going to show you how the VIX, how it looks compared to market movement. So we're going to go back to the SPY. Now, obviously, you're going to see this is the couple days that we had the big down move. That's when the VIX spiked up. So I don't want to overlay the two charts because they're going to get jumbled up together. But what I'm going to show you is the few times when the VIX spikes, we'll see what the market's reaction was. So let's let's move out to the weekly chart here. Okay, so the VIX spiked here, obviously. So that was just the past week in the stock market. Stock market dropped big. VIX goes up. Here, this was COVID. This was in March of 2020. Obviously, the VIX spiked again. The VIX extremely high. So we can go back to the SPY and see, we go back to 2020. All right. So here is the huge down move during COVID, right? So you can always see, if you find and see these spikes in the VIX, that's when the market is going down, and it's a great opportunity to start selling options at that point. And I'm going to show you how, with an options calculator, how those prices actually change for your benefit. So if you use it as a timing mechanism, you can make a lot of money. All right, so here we've got this, this looks like December of 2018, and we've got right here February of 2018. So let's go back to the SPY and go back to 2018. So here is basically February of 2018, had a little down move here. And then December of 2018 was right about here. So you can see when the market has, pretty good 1 or 2 days to the downside is when the VIX will really spike. And as you can see, once the VIX starts dropping, you can see the rebound. Here, let's open this up a little bit. So the market comes off for a couple of days, and then it rebounds very quickly. The market comes off very quickly, and then it rebounds very quickly. Here's COVID. Look how fast it rebounded. And even this week, you can see the market. Here's the market this week. So we had the down move, and then the spike back up in the market. So if you look back at the VIX again, you can see you get the spike, and then it comes down really fast and hard. That's always how it happens. If you follow the markets for as long as I have, these VIX spikes are great opportunities to take advantage of the options market. You want to be an option seller. Yes, it's very scary to be option selling at that time. We sell put options. Okay, what we do is when we sell put options, we're going to get a really good price for these options. And then when the VIX comes down very quickly, those option prices come down very quickly. So we can buy back these options and make profits very quickly. All right, so let's look at the fear and greed index right now, and we can take a look what that is as well. For those of you that don't know, you can go to CNN.com. Here's the address right up here. Actually, I don't have that. The address bar is not showing, but if you go to CNN, or do a Google search, fear and greed index. It's on CNN.com. Here it is right here. So the fear and greed index goes from extreme fear to extreme greed. Right now, you can see we're in the extreme fear category. And in the throes of the, last week when the market was really hitting lows, we hit extreme fear in the teens, like maybe 15, 14, 16. Okay. This is also a contrarian indicator. When the fear and greed index gets to extreme fear, you know that the market is getting close to hitting a bottom. Okay. And when it goes to extreme greed, that means there's so much euphoria in the market is bound to have some kind of sell-off at some point. And most of the time, it's gonna move in this, near the neutral range. Most of the time, somewhere in, I'd say, 40 to 60 range most of the time. And then when things get too crazy, too extremely on either side, it's going to hit the extreme greed or extreme fear. So right now, you can use the VIX in combination with the fear and greed index to help you time your option trades better. When you get a combination of a spiking VIX and extreme fear on the fear and greed index, you know that is a recipe for the market. It's going to take back off to the upside like almost instantly. I mean, you can see, if we go back to the chart, you can see how fast you get the 1 day spike and then it comes back down. Same with these others. You get a couple days spike, couple days spike, couple days spike. If we look back in the weekly, you can really see the difference here. Okay, this was COVID. Okay, so you get all these you can see all these spikes, but these spikes don't last very long. Okay, so it's hard to tell when these spikes are going to happen, but when they do happen, you have to take advantage of them, okay? So now that we know that when the market goes down and the VIX spikes, you have to be ready to sell some options at that time, as scary as that may be. Now, this is not investment advice. This is not me telling you, what kind of trades to make. I'm just telling you, when these scenarios happen, it's a great time to be a seller of options. So let's go to the let's look at an options calculator here. This is on the OIC website. It's optionseducation.org. Okay, that's the website, optionseducation.org. It's called the OIC. And free tools, this is their options calculator that you can use. So I just want to show you, some of the kinds of trades you can make and how fast they could turn in your favor. Now, what we're looking at here is the SPY, and we're going to look at the SPY finished at 533.89. That's the last price, on Friday, August 9th. And we're going to look at the volatility right now for the VIX is roughly 22%. Okay, here's all the inputs. You put the inputs here, and if you use this calculator, it's gonna default all these inputs in for you, and you can change them to whatever you want. And over here is the outputs. It's going to tell you the option value for the call and put option. So just to show you some of the things that types of trades you can make, and some of the things that I did. So with the VIX. We're going to show you, I'm going to pull up the implied volatility. This is the actual the price of the VIX here. That shows the implied volatility of the options. We're going to put this up to 60%. If we go back to the chart here and we'll look at the VIX. Okay, so the VIX actually spiked above 65. So let's put 65 in here for the implied volatility. And what we're going to look at here is a strike price of 483. That's 50 points below the current price of the SPY. This is what's called an out of the money strike. Stocks up, prices up here. The put option strike is down here, and we're going to look at the implied volatility of 65%. It's a percentage number. You just type in 65, and we're going to look at this week's expiration, August 16th, this coming Friday, and you can see the put option value, 50 points out of the money, is worth just about $1.70. So if you sold this put option, and these are the kinds of things that I do, you get $170 in your pocket. You got 50 points of downside protection here in less than a week. Now, just to show you, the VIX came all the way back down to about 22%. So just remember, we're at $1.70 here. If you sold this thing for $1.70 and now all of a sudden the VIX comes back down to 22 without the price of the stock changing, now that put option value is basically worthless. It's worth less than a penny. Okay, so you can buy it back for a penny. You sold it for $1.70, you buy it back for a penny. You've made $1.69 or $169 of profit on that one contract just because the volatility came back down. The stock price didn't move. We didn't change the stock price at all. We didn't change the strike, and we didn't change the expiration date. The only thing that we changed was the volatility. Let's go back to the 65% so you can see the difference here. Price of the put option is $1.69. Where the only thing we're changing here is the volatility down to 22%, and now it takes that thing down to 1 penny. Now, the other thing you can see here, let's bring it back up to 65. So here's our put option at $1.70. Now, even if the stock price dropped, let's say the SPY went down to 513, okay? And if volatility is still high, now it's trading at $4.60. You're thinking, oh my God, I'm losing all this money. I sold it for $1.70. It's worth $4.60. But if the VIX comes down or the implied volatility comes down, even with the stock price dropping, it's still only worth 4 cents a contract. So even if the stock price moved down, which is bad for put selling, the volatility coming down as well overtook the money that you would potentially lose on that selling of a put option contract. So the volatility, especially on spikes like that, is a huge, huge advantage if you want to be selling options, specifically put options like we do. So it's a great way to help time your trades to make profits very quickly. Okay. So you have to be aware when markets sell off like that. You know that it's a scary time for most participants. You check a chart of the VIX, you see that the VIX is spiking, you know, oh, hey, Lee just told me about this great opportunity. So when the VIX starts spiking, you can sell really deep out of the money put options. This is what I was doing last week when the market was coming off. VIX comes down, I was able to buy these put options back for a lot cheaper. So it's a great timing mechanism. You use the VIX and the fear and greed index as your two sentiment indicators to tell you that there's so much fear in the market. People are paying way too much for these option contracts. VIX is spiking. You want to be on the other side of it and start selling some option contracts. But be careful, okay? Don't go crazy. Just make sure you know what's going on. Use the stocks, these quality stocks, because it works on all stocks. All stocks were coming off, so that means their option prices were going up, and everything rebounded this past week. So the VIX can really tell you, get those spikes, that is going to tell you the market's ready to turn around and start moving higher again. So use these two indicators to help you time your trades better. All right. So that's that for today's lesson. I hope it's been helpful to you. I make these free videos for the trading community. We all want to help each other out. If you found value in this video, please give me a thumbs up. Give me a like. Tell your friends. In the description below here, I've got some other links, websites, books, things that I think could help you as an options trader. So have a look below down there. The next video that I'm going to put on this screen is a video about selling put options and why we like to do it so much. And lastly, if you want to go to our website, smartoptionseller.com, get our free ebook right along the header here. Click on the free ebook. It's our Put Selling Basics ebook on what put selling is all about, why we love it so much. Scroll down. You can put your name and email address down here at the bottom. Let me refresh the screen here. For some reason, the little box is not showing up here. But anyway, there's a box there to put in your name and email address. We'll send you an email back with the free ebook. All right. So that's it for me. I will see everyone in the next training. This is Lowell signing off.